Hello, everybody. Welcome to week 46 of 2025. This is the Build Weekly Roundup. You've got myself, Cameron Otsuka, and Matt Dines here with you this week. This week's topics: number one, high-profile investors in flux. We're going to go through several, uh, you know, headlines that we've seen coming out on investors either throwing in the towel or, maybe facing some issues. I think Matt's got a couple of different high profile investors he wants to touch on. Number two, kind of the meat of the episode. We've all been going through this U.S. government shutdown. Looks like it's been voted to end, or will get the vote to end very soon here. But along with that, there's a very interesting read on why certain members voted the way that they did. And then finally, there's been a lot of talk recently about housing affordability. How might we find different ways to entice or allow for more people to buy into home ownership? So again, Matt's going to walk through kind of some of his thoughts there. So let's just go ahead and start. I think this is going to be the I want to say the right thing here, but I think this part of the episode is going to be really interesting to kind of see the different folks that are popping up, names that maybe resurface from prior history. So Matt, I'll turn it over to you here. Maybe walk us through some of these high profile investors.
Yeah, so start off, lay the backdrop. This is a week of transition. We closed down the shutdown kind of issue that, the big thing on the plate in Washington, D.C. over the last 6 weeks. That's resolved, and we're entering into a new phase where, all right, what is the next item on the agenda? And I think rather than clearing out and resolving unclarity or resolving uncertainty, this kind of shutdown, this agreement that ended the shutdown, it was kind of always seen that this was the end game. I think we've just crossed over into a point where this is where the uncertainty actually increases. Like, what happens from here? There's a lot of things that are clearly pressing and urgent. This is where everything comes in. But these three stories, I think, if you put them together, kind of get along that big picture fact that we've kind of entered into the unknown. So remains to be seen what goes through from here. But all of these stories, I think we've seen interesting developments over even just the last week. So starting with the high profile investors in flux, we've got some, big names. These are the people who show up on the front page. My point here, why are we talking about this? When we're going through a big transition in financial markets, politics, global geopolitics, um, it's kind of like the big changes happen, it's going to correlate with like a changing of the guard, right? And there's some of these figures who naturally just age out. We'll talk about Warren Buffett here in a second. But then all of these big picture, tectonic plates in motion, the Game of Thrones, they're like the headlines you see about them are actually, it's kind of the tail wagging the dog situation. Everything you see in the headlines about specific individuals, they're responding to the big picture, deck chairs being reshuffled. Some of them, depending on which horse they hitch their cart to, maybe those deck chairs are on the Titanic, or maybe some of those deck chairs are on the USS Enterprise going to, very good places. But these are like the little episodes of transition where you'll start to see these people kind of like making headlines for what they're involved in. So there's signal in this unto itself. So we saw those from several figures this week. Scaramucci, and these are people I would say are influential figures in the investments industry, right? Private capital, or they manage public funds, manage a bank, etc. So starting this week, this one, Anthony Scaramucci is not I wouldn't call him a highly significant player by any means. He's not on par with some of the others we'll talk about in terms of um, capital, long-term reputation, all of that behind him. But he makes the radar. If you follow markets, you're aware of him. He's always going to make the front page when he's involved in something in particular. So this week there was a big headline. This one came out this morning, really hit the public, um, headlines. But earlier in the week, one of the funds, it's a REIT, that had been raising against since like the 2018 opportunity zones were created out of the Trump administration number one or 45 initiative with the Tax Cut and Jobs Act. You got this opportunity zone kind of um, policy spin up that was supposed to do good things, I guess, for revitalization and capital investment into underinvested census tracts in the United States. That hasn't really panned out. Didn't deliver the silver bullet it was expected to by any means. But one of those headlines you'd see, it's like, all right, how is this playing out? This REIT was specifically spun up to deploy into the opportunity zone tailwind. It actually only made one investment, as far as I'm aware, and that was this Virgin Hotels property in the warehouse district of New Orleans, which is just kind of a big area in New Orleans that's been developed for, I mean, basically just travel and tourism. It's a lot of hotels, a lot of restaurants, all of that stuff. But the announcement in the letter this week was a shareholder letter that was basically saying clients in the Opportunity Zone fund were likely looking at a total loss on their investment. So that might be the episode title. You're looking at a total loss, but that's definitely not something you want to hear as an investor, or a letter you want to see. So that was a headline. You see Scaramucci, and you can go back, you can find photos of him. He's involved. He's got the SALT conference. Um, he has influence with people who matter. Um, Very involved in crypto exchanges, all of that kind of segment, bringing capital into that space. But it's just one of those kind of headlines you want to put at the back of your mind. All right, you see a influential figure show up, you see the news, and then you try to map that to where we are on the chart. So telling your investors that they've been completely wiped out, it's not something you want to do as the capital allocator. So just hold that one at the back of your mind, or put it on the chart, and then um, try to incorporate that into your overall mosaic as you gather all this other information we're going to share about other influential managers, to kind of get your bearings on where we are on the cycle and the process we're working through. So number two, that's Scaramucci. Any other comments there,
No,
Cameron?
yeah, I think you
Okay.
covered that one well.
All right. So this one was also interesting. Everybody remembers Michael Burry, famously played by Christian Bale in The Big Short. Basically categorizing, or on this kind of the Trump talks about the weave, where you do several plot arcs at once. That was the theme of this movie, right? You got a bunch of different players in the financial industry and how they interacted with the subprime mortgage trade. Michael Burry was, famous for being short the subprime mortgages, um, and wrote it out when it was expensive to carry that short, and ultimately got paid out. So he was, if there's a protagonist in the movie, um, Michael Burry, or Christian Bale's character, was definitely one of them. So this week, or it was actually late October, a couple weeks ago, Burry sent out a letter to his partners, capital investors at Scion, his fund, that he was shutting down the fund. And the reason he cites is, his language. Juxtapose this with um, Anthony Scaramucci's language to his shareholders. You're looking at a total loss. Burry's language says, my estimation of value in securities is not now, and has not been for some time, in sync with the markets. And basically he's just saying I'm out of sync with where pricing is at. Doesn't like the outlook for the investment landscape he sees going forward. And rather than grind it out like you see, in the imagery of Christian Bale just lying on the floor, seemingly just waiting for something to happen or the shoes to drop. I think here he's just saying, I'd rather just sit this one out. So he's distributed all of his capital out to investors. Um, his existing partners, he mentions here, they're going to continue going under a different shingle. But I think that's also, if you're looking at cyclical developments, Michael Burry just stepping back, also, an important piece of information for whatever things look like ahead of us into this uncertainty. Um,
And I did think one charitable way to look at this to Michael Burry, right? I've seen a little bit of commentary of folks saying, well, maybe, in prior episodes, right? In '08, for example, he had to really, uh, let's go with argue with his investors on why he's continuing these trades. But by doing this, he could just say, hey, let's terminate the family office. We'll run my own money. I don't have to report to myself. So
yeah,
that's a charitable way to look at it. Obviously there's a different way to look at it. It's more negative, but like you're saying, definitely a signpost along the way.
yep, yeah, exactly. I just think whatever's coming, he doesn't want to deal with outside shareholders, just all of the demands, the stress, baggage that comes with it. I think exactly right, Cameron. He wants to just eliminate that cargo for whatever's in store. All right. So other one, Warren Buffett sends out a news release Monday morning. Basically, this is the way I read this is like this is the close. Like this is the end. There's no Ozzy Osbourne, farewell concert here. I remember July. Um, couple weeks before Ozzy Osbourne passed away, he actually, I think he sung on stage and
Yeah, at a concert or
in the
something.
UK. Yeah, that was his exit from the stage. I think this letter here is probably the last we'll see from Warren Buffett in public life. Different situation than everybody else we've talked about so far. Warren Buffett um, has really stood atop the investment industry for 80 years, ever since he's arrived on the scene. I think even before he was a public figure and had bought Berkshire and then turned it into, by accident, an investment vehicle, right? A public company that invests in, I mean, just long-term private and public holdings, company holdings. Even before that, he was active in private investing. So basically, I'd say since World War II, since he came of age as a man, this guy's been at the top of the field in terms of just standing and integrity. So the way I view this is the exit. I think everybody our age seems to be going through this recently, just the cycles of life. Our own grandparents have been hitting this kind of milestone, and just speaking to me in particular here. One example, which may not actually carry over to others, but I read my grandma. I actually lost both grandmas this year, but one of them who passed away this summer. When I was back at her farm, I was just going through, her chair where she relaxed at the end of the day, and what she was reading. And there's a lot of pamphlets in there about preparing for end of life. And one of the things that kind of gripped me, and I'll just file away for my own self as we age. I think eventually, like once you're in this process, like death is in front of you, and you recognize it. You kind of know it's coming for a lot of people this age, like 6 months in advance. It's kind of time to go. I'm ready to go. Um, and I think the typical behavior is the way this book described it. I should go fetch the title, but basically, like once you're there, you kind of realize you're crossing over into the new world. Like you're part of you is living in on earth with everybody else around you, but you're going into the next realm, whatever you hold in your head that next realm is, right? So you start to pull back your focus from things that maybe once mattered to you that no longer do. Um, so for my grandma, it might be, giving up quilting or something like that. Like she does this stuff for charity, and you still focus on interacting, with your family members, et cetera, all of that. And then your other time is really recollecting on your life, tying up any loose ends, all of like the spiritual dynamics of the dying process. When I see this, it's kind of for me, it's like all right, when my grandma gives up her lifelong love of like quilting or other um, just aid society type of activities that she was heavily involved in through her church life, starts to hand over the reins on that. I kind of view this when I read this letter from Warren Buffett as like, all right, this is a person who's going through this last kind of journey in their life process, which this isn't a hot take. Warren Buffett's about 98. So
Yeah.
this is part of that handoff. His best friend through life, or among them, top one, two, three, partners in life. Charlie Munger passed away, as we all know. Was it last
I
year?
think it
About a
was,
year
yeah.
ago. Yeah. And so it's kind of through that. This guy, I think I'm reading this as a guy who is just going through that process with grace. Um, and this thing he does it well, like through the very end. I'm going quiet, right? um and I think one of the things I just say, I think, all right, for like Cameron and we interact a lot with the Bitcoin scene. There is a lot like within that group, um almost a lot of hostility towards Warren Buffett, just because the quote that's going to last on his opinions on Bitcoin, it's rat poison squared, right? Or that was actually a Charlie Munger, but it's going to rub off. Like the two of them almost speak for each other, even though they make it clear they don't. But there's no distance between those two on that statement, even though it came from Charlie Munger. They both have those feelings about Bitcoin. Um, the Bitcoin community has largely kind of rejected this figure, but I would encourage everybody, go back, read his writings. His annual shareholder letters um, contain a lot of valuable investment wisdom that is timeless, in my opinion. Market structures change, individual investments change, nations rise and fall, all of the above. But if you just go read those with a sense of grace and humility, you'll find a lot of value in there. And we could just talk about developments going on in that Bitcoin crypto space. A lot of volume going on, a lot of trading. These, say MicroStrategy stock turns over its annual shares at a pretty ridiculous rate. I want to say like you can pull this up in a tweet, like 10x annual turnover, which is, I wanted to call out, a couple of weeks ago, hey, this liquidity isn't free. And Warren Buffett specifically wrote a letter on this, talking about why he never split the Berkshire A shares, specifically the costs that ultimately funnels through from the shareholder base towards the capital markets middlemen for ultimately no benefit to the shareholders. But you go through, there's tons of just nuggets of wisdom in those letters. I'd encourage everybody to read them, like the entire corpus. I think they go back to the mid 1960s, and they're, in my opinion, timeless, highly valuable. Need to be on any investor's reading list, and apply those to your own skills and ability to play the game for anybody who's wanting to do that. So we'll leave that there. But Warren Buffett also, this one was a life, age related, but it's also a turning of the guard. Like I would say, it's a perfect kind of bookend to this chapter, like this individual exiting the stage, um, which really highlights, hey, there's going to be a new cast of characters coming in for we talk about the uncertainty to resolve in the quarters and years ahead, but we're talking like decades long. Like there's the new are entering the scene. Now, also, just another thought. Every time anybody has called the next Warren Buffett, that's a good contra indicator. Every time you see that on a Forbes magazine cover or Barron's, et cetera, the fade that one hard. But anyway, um, big development this week there. There was another one. Ray Dalio announced he sold his last remaining stake in Bridgewater and is stepping away from the hedge fund board. He's also, I'm out. And then were there any more there? There were a couple of
But
other
yeah,
announcements, but those are pretty. You've already got a lot like that. Those are like
yeah, we did 20
A-list
minutes on
hitters.
just people retiring or stepping away.
So so it tells you, like besides Warren Buffett, who is naturally going to age out, like tells you there's something there. Everything you're seeing, the key figures in the headlines. So that's it's an important indicator, in my opinion, for where they see the investment landscape at and where we're at in the cycle. And if you're saying retirement is more appealing to me than continuing on, um,
Probably time.
there's something interesting in front of you.
Yeah.
I'll just put it at that. All
Well,
right.
so I do
So
think like speaking of like ends of eras, right? We've got kind of on the political side too. There's a lot of you could map this directly onto what's going on. I think on the political side.
yeah, so we had the shutdown in this week, which, if there was a certainty in life, the shutdown wasn't going to go on forever. It was going to resolve itself. So I just want to talk about the breakage and collisions here that I find most interesting in analyzing what just happened. So we did call this out as soon as the shutdown became clear, late September. We said this is going to go into effect. The Republicans had the upper hand because possession's 9/10 of the law. They have the majority in the House, Senate, and they hold the White House. So what we saw as the most likely, since there wasn't that much really to negotiate on, and there wasn't a position of strength for the Democrats, we said, we can go back and look at the tape here. We said there was going likely to be a breakage in the Democrats' minority coalition, and that's exactly what happened. You saw 8 Democrats who we boxed in green flip from the nay camp to the yays to get this thing the 60 votes it needed to achieve the supermajority and break through the filibuster process. You also didn't have to see the Republicans pull out the nuclear option, which is ending the supermajority rules. Eventually, as this divide gets wider and wider between these two factions, power factions, and they can't agree with each other and achieve consensus, eventually this supermajority, like the forecast is it's going to disappear. I think in this process, though, you don't want to be seen as the party who did it, because that's kind of you'll always be pointed to as the side who eliminated this thing and is operating in kind of bad faith, pulling back the filibuster rules to give the minority opposition a little bit more strength when they're out of office or out of power. So 8 Greens, 8 Democrats flipped yes. That kind of suggests to me there really is nothing holding together this minority coalition. At best, it's a weak coalition. It needs to regroup and firm itself up heading into 2026, which is kind of the underlying dynamic you're seeing on election day results with, the Mamdani type of wing of the party, spearheaded by the New York City mayor election victory. Seems like the path that the new Democratic Party is heading into 2026. We'll see if it resonates with voters. I am skeptical, but kind of the same way that the Republican Party underwent its metamorphosis in between 2014 and 2016. You can say before that even too with the Tea Party.
Yeah.
Yeah, I'd say like who was Boehner's whip who lost his seat? I want to say Virginia congressman. He actually lost and got primary. That was your sign in my opinion. It'll come to me probably after we're done recording. I think that was the 2014 midterms where that one happened. That was your sign that the Republican Party was going through its metamorphosis. It really completed itself when they allowed an outsider in Donald Trump to win their nomination in 2016. I think the Democratic Party has been fighting against that transition. The incumbents have been holding on to power. Pelosi, Schumer, et cetera, so representing that last wave of old guard. But Father Time is undefeated. You eventually age out, and I think that same process that we saw in the Republican Party in the mid 2010s, well, the Democratic Party is now going through that. So you saw eight Democrats flip toward yays. You even saw the loosest members of the Republican coalition. I call them Susan Collins from Maine, Lisa Murkowski. Even they flipped to yays. The one who didn't, right? If you go to the nays, one of these things is not like the other. Mr. Rand Paul, Senator Rand Paul. So you have to really question what is going on here? Why is Rand Paul so opposed to this? And part of it is this idea that you're going to defeat this process we're going through, like the deficits, right? You stand behind this foothold that you're occupying. You say like, not one, and no more deficit spending, et cetera. That's not how the situation is ever going to be resolved, in my opinion. Like you're like the tank man standing in front of the tank at Tiananmen Square. This episode won't be aired in China anyway, so we'll just talk about that. That'll get us blacklisted, but that's not going to be the path that actually shifts this system out of changed, which I think ultimately everybody wants. But like the nays, I researched this week. Why is Rand Paul here in with the nays still? And you get into his number one talking point was the hemp industry provisions, right? So there was this provision inside of HR 5371, which is the continuing resolution to end the government shutdown. There's language in there, which I think they actually got Mitch McConnell to put in. So this becomes a hot button issue in Kentucky, right? You have their two senators on opposite sides of this one. But inside of HR 5371, you've got language that would ban the sale of hemp-derived THC products, so if you think about this, I know no one tracks this fully. And as I dove deep into this, I was like, well, what is going on here? You've got the United States cannabis industry. We'll talk about why it's actually a bigger deal than you think. You kind of split it into the white market, the gray market, and the black market. What do we mean by a white market? It is government sanctioned, regulated, and taxed, right? So once something in terms of like the economy becomes taxed, it's part of the government structure, right? Taxes, government has a revenue stream coming from it. It wants it to succeed. This cannabis industry, which has really been growing, I'd say, it's always existed, right? I don't have to go back to, how long, cannabis has been in the United States, but it's basically a post-World War II phenomenon. Kind of shifted over from imports from Latin America, grown in Mexico, et cetera, coming across the border in the United States, to now we're actually in a condition where U.S. farmland produces most of the product. It's actually mostly grown inside the lower 48 is the shocking thing, is how this industry has developed. So I think we've actually got a surplus based on what I've read about this, just from California, Washington State. Like this is probably just not even on the radar of most Americans yet. U.S. cannabis has basically become, a domestic market at this point.
Right.
Everything you're seeing with Venezuelan speedboats blowing up in the Caribbean, et cetera, That's really for the cocaine trade, is what that one is focused on, and that cash flow route. This domestic, or at least the marijuana and hemp kind of cannabis industry, this is all just purely a lower 48 issue, which means it's inside the recognized sovereign boundaries of the U.S. government. And the process that we're going through is basically, in my opinion on this, you start with, over my lifetime, we all attended DARE, Reagan era drug abuse resistance education, curriculum in the U.S. trying to say just say no, right? That didn't work. So now you've got this kind of white market that's tried to be, that's trying to take over the black market, which is really the untaxed underground kind of organized crime run kind of business operation of this marketplace. And so you've got an interesting split going on here. Size of the black market relative to the white market, it's roughly 2 to 1 still. But the white market really didn't even start to develop until that, 2010s wave. I think it was the 2012 election when Colorado and Washington became the first states to kind of green light cannabis production and distribution through taxed and regulated dispensaries. And that included like a full kind of supply chain look through in terms of the vertical production of the goods. That's a trend that's been underway. It's only like 13 years in process. But as we're going through this situation with public deficits, debt, et cetera, it's a monetary situation. It's a monetary phenomenon at the end of the day. What's happening is the recognized authority, the states that constitute the federal government and the federal government itself are in the process of enveloping and incorporating this little, it's not even a little market anymore. I'll get into the size of it. Yeah. This industry into their purview, basically, into their complex. So this thing that Rand Paul is fighting for was actually you call it a gray market, right? It's outside of what's going on at the state level with these, licensed dispensaries. Like this is like just going out and buying marijuana or CBD products, et cetera, at these shops that have popped up, across the country. I think about half the states have legalized cannabis at this point. That's the white market. The black market is your underground drug trade, everything classic. You see it in every movie, well documented, all of that. And there's this gray market in between that showed up with the 2018 Farm Bill that allowed for kind of like production of THC containing products, but they were derived from hemp, not the cannabis plants or the marijuana plants themselves. And that thing just got completely axed with this HR 5371, this continuing resolution that ended the government shutdown. So you think about all senators, lobbyists, and at the end of the day, they're funded by industry. And so I haven't looked through Rand Paul's record, like who is financing his campaign, re-election committees, all that, the super PACs. But you kind of have a sense of what someone stands up for by how they act in terms of legislation. So there's definitely some incentives here, is what I would expect if we really pulled into the scenes or pulled up the hood and looked at who is the industry lobby for this little niche segment. But yeah, that's underlying this. That's Rand Paul's hill he's going to die on here. Now, why is this such an important market? I mean, in terms of size, this isn't like Google search advertising or something like that, but it's a meaningful market. If you compare it, so tobacco products, roughly 110 billion, 108.5 billion dollar annual consumption that Americans spend on tobacco containing products. This is cigarettes, nicotine pouches, smokeless tobacco, all of that stuff. The cannabis market is on par with that, 100 billion to 148 billion, right? It's may even be bigger. And right now, you've basically got the sovereign entity only has control of roughly a third of it, or has, yeah, it's a control. Like they're a part of roughly a third of it. Everything else is operating outside of the sovereign jurisdiction. Like even if it's within its own sovereign territories. So that's the process. The government has kind of gone through. All right, done fighting it. Now we're going to go incorporate it. And you think about the tobacco industry, similar times, milestones. It's an industry centuries old, right? But a big development in the U.S. tobacco industry was the settlement with the states. I think it was in the year 2000 or 2001 era, where you got from the states at the state level, you had a bunch of attorney generals enter into a settlement with the tobacco industry, and basically they came into a process where the tobacco companies are going to pay the states a certain amount of revenues based on market share of the producers on an annual basis. This thing is that same situation once you got regulatory capture of the tobacco industry. We're working towards that same process with the cannabis industry as in the big picture what's going on. It's just one interesting thread, um, amongst all of the just the crazy volatility and turmoil that we're living through in this era. But yeah, it's $100 million annual prize, and people are going to fight over it.
Absolutely. And I think that's something that you kind of have to dig into. That you have to see the votes, right, and then take that next step to then say, okay, well, why did they all vote this way? And I think so much of the focus over the last couple of days has been purely on the Democratic Party for good reasons, right? But I thought it was interesting that you also identified not just Rand Paul, but those other two Republican senators as well, saying, hey, there's some interesting tidbits here if you could dive into those.
Murkowski and Susan Collins. I
Collins, yeah.
I don't know specifics. I just know Lisa Murkowski. Her father was a either senator and governor in Alaska. You inherit kind of a political dynasty, similar to what we just saw in New York. We saw the end of one. Andrew Cuomo fails to win the election versus Mamdani. Not Doesn't have much popularity left inside of that city and state. His father was also, I want to say, governor. Was a famous political figure. It's kind of that same process. These are people with a lot of influence. They control the political keys. Lisa Murkowski is kind of that same thing in Alaska. Um, I don't know any more specific, business interactions much beyond that. I know, Alaska tends to be a heavy oil and gas state. Not that much else going on up there. But it's kind of one of those things as you control the the keys of power. And right now, despite being pretty unpopular, she's still holding on. Susan Collins, not deeply, and I'm not as familiar with her situation in Maine, but she's one of those kind of toss-up votes. She's always been on the fence. So, remember we talked about the Republican Party went through this transition, like it really completed it in 2016. It's like the laws of thermodynamics. Heat always flows from hot to cold. Kind of the same thing. If you think about the Republican Party, it went through that transition from the old guard. Candidates like John McCain, George W. Bush, Mitt Romney. Those are all gone. Like we're not going back to that era. The candidates now are Donald Trump, JD Vance, etc. Like
A different
we've
style,
crossed the
different type.
Rubicon.
Yeah.
We're not even different style, it's different power bases, like completely
Yeah.
different. Like they represent a different faction of capital and power. um so I would view, like, Susan Collins is always in the fence. She's interacting with the legacy Democrats very often, the one we talked about who had just had their keys from the car taken away. She's always been on that line as well. So that's what I would chalk up there. But Even she coalitioned with the Republicans and got them the 60 votes they needed to move this whole process forward, right? So, basically, um, the salt in the tank, preventing the car from moving, is like that step was not taken. But yeah, eventually, I mean, the senators come down to state level popularity. It's a state by state discussion. So the individual politics for that specific state, I'm not an expert on Maine politics by any means, but I just know how she interacts with the transitions we've seen across the parties underway since the mid 2010s, which is really responding. The event that kickstarted it was actually 2008. It's a monetary phenomenon at the end of the day we're going through, and 2008 was the starting gun that got this race going.
Yep. And so then moving on to other topics that we could get mired in for hours probably, but housing.
No, 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 we're not done yet. We
Oh,
still
we're not
got
done.
slide 12, Cameron. Yeah, slide 12. So talk about the power factions like going at it with each other. Two stories here. I got on the left and the right of the screen, but also the political left and the political right. And you look at how they interact with each other. They use um, I guess the surveillance state is what I would call it to, I mean, essentially conduct, like this is stuff. If you remember the Whitewater scandal, right? The whole thing amounted to, it was Richard Nixon's reelection campaign and the things he was doing to essentially conduct domestic espionage against his political opponents, right? Like that was what breaking into the Whitewater building, DNC headquarters, was actually about in substance. You've got two cases here underway, or like two narratives here in the headline. On the left, you've got what's going on in this Arctic frost probe. You had under the Biden era Department of Justice and Special Counsel Jack Smith on the January 6th episode. With this Arctic frost probe, you actually had the state request surveillance of over 150 Republicans, a big, a sizable number of them seated members in the House and the Senate, right? Just members of Congress. And then this was like just involving, if you go back and read Edward Snowden's kind of memoirs or autobiography, Permanent Record, it goes through exactly these core technologies, right? The metadata surveillance, like a log of which phone numbers an individual phone number reached out to, how long they talked on that connection, et cetera. So there's a ton of just I I don't know, I guess just information that's caught up in this that's part of the um, we just call it like just the political process. It's just kind of ingested this as a tool in this era of discord, I guess, for lack of better words, right? And on the right this week, you see this is very clear in the headlines. You're seeing the financial records related to Fannie and Freddie, right? For mortgage applications or mortgage finance, anytime a borrower interacts with the government-sponsored entities, the agencies who guarantee um, principal and interest payments on mortgage-backed securities, any interaction with those is kind of logged as kind of involvement with a public entity, right? And you've seen these mortgage records increasingly used in the political process and in the last year. And this has shown up, I can just pull through by memory, the Lisa Cook headlines. Scott Bessent, we've seen headlines. Hey, he did this in 2007, 2008 with a mortgage. We can go through like there's Letitia James, New York Attorney General. So these are being used as the like in this battlefront that's underway between these different power factions. You're seeing it on both sides. The the mechanism of the state itself is being used as a weapon, um, and it's not one side or about or the other. They're all doing it. They're all using it. So this is just kind of a just another milestone of where we're at in this era of political divide and conflict. Um, I don't know when it ends, right? But for now,
I think the answer is never,
this thing
man.
continues on. What'd you say,
I
Cameron?
think the answer is never.
Eventually, we'll get to a resolution event. In my opinion, this will resolve itself where the system resets, we reestablish a governance structure that everybody can agrees with. Old institutions either evolve and adapt or they go away and new ones emerge. But I think eventually to get out of this era, we will find a like the system will re-engage into a or reconstitute itself under a new governance structure that everybody can agrees on, or most people, 80%, 90%, like a massive majority of people agree on, and then society can move forward off of that. But in this intermittent state where the old kind of governance structures and ties that bind, that kept everybody in agreement, where society can just cohesively, move forward over the last 15 years, or basically since 2008, and maybe even before that. Um, the whole the glue has been disappearing. So we can't get back to making forward steps as a society until this thing resolves. So we're in the middle of the whole thing, continuing to break down, reconstitute itself. Um, and that's just kind of part of the bigger picture. What's in front of us, I don't know, but no one does perfectly. But you see those, high profile investors just stepping back. They're like, yeah, the best way to avoid an alley fight is stay out of the alley. So that kind of tells you, uh, it gives you signal in itself where this thing is. All right.
Yep. And I think where I thought we were going into housing was because we talked about Fannie Mae here. So let's move on into housing specifically. I think I've seen a lot of headlines over, and this isn't just housing, right? It includes, I believe, a potential 30-year car loan. Um, so you're seeing a
What?
lot of things trying to find ways to extend duration, try to make your payments lower. Yeah, the 30-year car loan is
How does a car
insane.
even have a 30-year useful life? That makes no sense.
I
But
don't
okay,
know.
let's just leave that
I
one
think they're
aside.
floating
Yeah.
ideas. Yeah. So,
Yeah.
but the 50-year mortgage is definitely one that was floated.
Yeah.
So
There's
maybe explain
50-year
that.
mortgage. Yeah. So in the last week alone, like not even 1 week. So we started seeing headlines Friday morning. This first one came out. Pulte teases tech investments by Fannie and Freddie. Um, what this would effectively do, obviously, we've got an AI bubble. Um, Bubble itself doesn't mean it's malinvestment or not. We won't know until we know, right? But this is like, all right, the technology wave has kind of captured investors' attention. We're basically betting it all on red, to put it in the roulette wheel analogy, doing massive data center build out, all of that. Like essentially the monetary system, the credit framework, the dynamic is such that we both have to plow capital into this investment just for the perpetuance or perpetuation of the system itself, right? You need more monetary creation, which means more projects to be invested in. So you need demand for financing. Obviously, the big tech in this AI trend is overwhelmingly the strongest narrative that's captured attention from, I guess, tech executive, financiers, et cetera, to say, hey, this is where we need to allocate society's resources. Let's go work on this, right? But it's also reached such a point where the numbers are so massive that to keep this thing going, um, just in terms of the capital expenditures, it's going to take an increasingly large share of the real savings in the economy to even let this thing play out. So we're at the point where, all right, the banking system doesn't want to touch this on its own because it's so high risk and they don't want to bet it all on this one thing. They would much rather see, other players in society absorb that risk, just because the nature of the risk, the fractional reserve banking system, it's actually not built to handle speculative investment like on these technology waves. Similar things, railroads, radios, telegraphs,
Yeah, Matt
personal
actually did a really good
computers,
episode on
internet.
this last week. To just
Yep.
to call that out for folks, watch that one. Matt really goes into kind of historical examples of seeing similar
Yep.
things in this space.
So you see, like the amount of capital required to see this bubble through would quickly dwarf what's available in the banking system. And all of the developments we've been seeing for like this last 6 months, where related parties will engage with each other on equity-based financing schemes. We can go through the deals. We talk about them every week. AMD and OpenAI, Oracle, OpenAI, everybody on OpenAI, right? Um, that one's running on, borrowed time at this point. And what you need to do to keep this thing rolling is you need more balance sheet capacity. This is where Bill Pulte comes in. Fannie and Freddie balance sheets, they are massive, right? They serve a specific purpose. Uh, get American, you know, homeowners or American, what do you call them? Just American workers into a long-term mortgage at subsidized interest rates, to enable, economic, value creation over 15, 30-year time spans. Those balance sheets exist for exactly that reason. But it's truly massive, GSE. Like we talk about other countries, China, et cetera, being GSE operated. These are our two largest GSEs. You know, Federal Home Loan Banks, uh, ag credit, all of that. Those might be, in that same territory, but nothing comes close to agency mortgages, in that entire industry and what it does for the U.S. economy. So to use those balance sheets to kind of see the tech investment through. I mean, I don't know. I won't pass judgment, but we have a big picture sense of what's going on here. You've also got this process where Fannie and Freddie themselves have to go through their own transformation into this new era. Maybe that does involve tech. Maybe it does involve, Bitcoin, stable coins, crypto, all of that stuff. Despite my misgivings about stable coins and crypto, Cameron and I have done a good job documenting, I think, over the course of prior episodes of the weekly roundup. But bringing in the tech investments into Fannie and Freddie, that's kind of an acknowledgement on both sides. Both Fannie and Freddie um, have a problem that they need solved, which is they need to build up more equity capital so that they can IPO themselves and revitalize or exit conservatorship with more capacity to fund mortgage borrowings, because the capital market capacity just doesn't exist right now to get the young Americans, late millennials, Gen Z, and then Gen Alphas who will be coming just right around the corner into a home mortgage and keep this system humming along. Um, so like from one angle, it could solve a couple of problems. Is it the best approach? I don't know. There's pros and cons, as there are with anything. Now, from the tech bubble standpoint, they've clearly hitched the entire U.S. economy, Western economy. Like they've bet it all on the AI kind of technology ultimately playing out. I think in hindsight, the way these work, we talked about this last week. What you usually see is an overbuild. Um, you eventually realize the private industry builds up, the Tower of Babel, just one floor too high, too much capacity, the thing collapses upon itself. But then in the aftermath, that overbuilding capacity um, sets the stage for that same technology to actually complete its destiny and grow into its potential on a timeline that is actually longer than what the initial speculators thought. So, an
Right.
example here, um, internet, the tech bubble, the dot-com bubble of the late 90s, early 2000s. What you saw going on as, Yahoo and, those companies were capturing massive attention. Um, in the background, you saw firms like Enron, WorldCom, Global Crossing, rapidly building out the infrastructure layer, the CapEx, laying fiber optic cable across the US, like this whole phenomenon of dark cable, right? It was just tons of fiber optic cable purchased, but they actually way overbuilt because the demand didn't keep up with the level of investment of supply. All that cable sits dark for a while before the bandwidth was actually there to fill up that capacity. But what we saw after the collapse of Enron 2001, you go into like a little dark age. But then by the mid 2000s, you saw like phenomena creeping up like social media, Facebook launches, MySpace. People are starting to post videos online, all of that stuff. YouTube shows up, and I want to say 2005 is where
About
it
that, yeah.
first appeared, and Google acquired it. Within its first couple of years. Then you start to see the move towards streaming, all of that. And by the mid 2010s, fully a decade later, this thing that the initial speculative bubble had seen and gotten way over its skis about in terms of level of excitement relative to actual reality and demand showing up. Um, those two things got way out of whack, in the late 90s dot-com bubble and then ultimately the 2001 collapse. But they were ultimately proven right, 10 years later. That same thing is highly likely, like that same situation is highly likely to how this is going to evolve with the data center build out, all of that. So throwing the public-private partnerships, the agency GSEs, putting that balance sheet at risk right now, probably not the best idea, just because the downside is so massive, could actually worsen the public deficit situation if we make a timing mistake here. But in the long run, maybe this could work out. So, all right, that's one thing. So you're seeing right now, um, just to just put that one aside now, Fannie Freddie balance sheets for tech investment. Boom. You also had other policy ideas floated here. They're just coming out. It's almost like they're just talking in live stream or, just free flowing fireside chat. Bill Pulte, what can we do here to fix this housing problem, which is very quickly becoming a pressing issue in the US economy? Oh, 50-year mortgages. Let's throw that trial balloon out. Saturday morning, Sunday, let's see the Twitter discussion, what everybody thinks about it. Kind of universally tanked right now. Moving from a 30-year to a 50-year mortgage is not going to do much to solve the problem. All right. Cameron mentioned an auto loan 30-year. Yeah, that's getting turned out. That's a terrible idea. Portable mortgages that came out, floated in discussion this week. Okay, all right, that one, there's some positive reception too. What it really is saying to me though is like it's signaling the five-alarm fire that's going on right now in the U.S. housing finance kind of subsector of the overall capital markets. It's become a pressing issue. Something needs to be done here, and right now we're just throwing our own policy alternatives to see what just throw it all at the wall, throw the kitchen sink at it, and see what sticks is kind of the approach right now.
Yep. And they know that they really don't want to devalue home prices since so many people's retirements, just total net worth is wrapped up in that. So the
Yep.
only way then to try to find ways to help people into homes is really elongating the time that they need to make payments and things like that.
Yeah.
So
Good point. Yeah, most people like their savings are actually tied up in the value of their house, and as you see, um, just the wave of late stage boomers in retirement, like either selling their home to fund life at a nursing home in their late years, or just sell your house, downsize to another, etc. Yeah, someone would have to take a hit right? So in terms of economics, I think the term is Pareto efficient, right? Can your policy improve the outcomes across the board for everybody without harming anybody? Then there's free lunch available in the policy space, and you should push the frontier to make if you're making even one person better off without harming anybody else. It's like, all right, push that boundary. You've taken ground. It's complicated here, right? Because any alternative, like there's no free lunch. Like if you let housing prices fall, that's going to benefit younger Americans at the expense of older. If you make these tech investments, same thing. Someone is harmed, someone's hurt. You're also adding risk into this overall system, right? So yeah, we're at a point where there's no free lunch, there's no easy options, which, once you're painted into that corner, it means something big probably is going to happen in terms of like the market forces naturally taking hold and guiding the system towards a new equilibrium, and that process can be very volatile, very very disruptive. And I think that's why, to get back to that first kind of theme we went over at the beginning, if you're a high profile investor, maybe you see this coming, you're just like, step away. This is my time to step back. Let it all sort itself out, and I'll come in later if I have the timeline. If I'm a certain age where I can come back. Or if you're not, maybe, obviously Warren Buffett timeline is not there. Ray Dalio probably as well. I think he's late 60s, maybe 70s. He probably wants to just enjoy retirement at this point. Um, Once he exits stage, I don't see that coming back. But other figures, yeah, Michael Burry, he's late 50s, and this is where it talks about some pending announcement on November 25th. Yeah, there's probably another act remaining, but it just tells you there's something in front of us, and the people who are most connected and at the highest end of the capital markets and investing field are giving you signal by their headline announcements in the last week.
I think that's a good spot to leave it for this week, Matt. So thanks again for going deep on each of these three topics. I think you wrapped that up really well, tying it back to the very beginning. So thanks everybody for tuning in. As always, please like and subscribe on YouTube X, LinkedIn as well. You can find Matt and I on X. See y'all next week.